everybody can hear me. Um, I'm just waiting for the clock to strike 6. Okay, we're at 6 p.m. I know I've been having technical issues with connecting on time, but I made it this time. All right. So I'm happy to be here as always. And then this is, of course, this is the Dr. Inia Desnia show. And of course, this is where I speak on small businesses. Oh, Lord. I hope everything is okay. Okay, I think it's okay. Oh gosh, love technology, but sometimes it happens. So again, happy to be here, Dr. Inia Desnia show. And of course, this is where I speak on issues for small and medium-sized enterprises or businesses. The goal is to make sure, as much as possible, through educational advice. Of course, this is not professional because you still need to seek professional knowledge or professional help, because it just depends on what your situation is or how your situation looks. But I will, speak on things that will actually drive you to that area that, okay, yes, what can I do better? Oh, this exists, just to get it out there for you to know. And also I bring on this platform other specialists that will actually speak on issues that are related to the business, your small or medium-sized enterprise or business. And also here and there, people have questions that they want to appear on this show so that others can benefit from this show, where when they listen to their questions being answered. All right. So again, welcome. Happy to be here. I appreciate everyone that has watched, commented. I know some of you have not subscribed, but at least you've watched, commented, and I also appreciate when you say, oh, you didn't add this. So really love that, and hoping that we've done better, or the show has done better over time. Although we're still babies, we're still young, we're not even up to a year, but excited to be here. All right. So if you're just joining us for the first time or joining this program for the first time, you're very welcome, right? And so today, as always, I have another interesting topic, very interesting topic. Now, I think I've seen this question here and there, but I just wanted to address it, in full, right? Of course, when I'm addressing things, questions like that, usually I don't have time to tell you the list, right? I'll give you some points, right? Because this is a very short program, right? Short show. Okay, so people ask, do I actually bring on a partner, right? Do I need to bring someone in to be part of my business as a partner? Now, you can bring people in so many ways. There's now affiliate marketing. You can bring people in so that they can market your business or your product, right? And you give them some commission. That's not what I'm talking about. I'm talking about when you say, you know what, I want to bring this person in as a partner. And so sometimes people ask, okay, should I do that? Should I not do that? Well, it actually depends. But today I'm just going to look at the pros and cons, and then some issues that you should consider, or you should ask yourself, or you should make sure these are in place, and also ask yourself. Then you can decide, okay, yes, I need to bring on a partner or not. Okay. Now, what are some advantages of bringing on a partner? Now, a lot of times people don't just have the money. They just don't have the money to run their business, right? And they have someone that says, you know what, I'll be a partner of your company as long as, I get a percentage. I know I've mentioned this before. Do not give equity above 50% to your partner. All right. That means that the partner is now controlling the business, right? So you always want to be in control. I mentioned this when I talked about equity in one of my shows, but just to make sure we understand this, when you're bringing on a partner, you decide to bring on a partner, please make sure the equity is not above 50%. Okay. All right. Okay. So let's go back. So what are some of the advantages? As I said, sometimes you say, you know what, I need extra money in the in the business. And, I am not really, I don't really want to get a bank loan. I don't want to get a loan at all, but I just want some money in the business. And so some ways to get, or a way to get money is to actually get a partner that has the money, right? So the partner might say, you know what, or the person you want to bring on to be a partner might say, okay, you know what, I'll bring this amount of money, right? I'll bring this amount of money so that I can be this percentage, I can own this percentage of your partnership, right? Or of the business. Well, it's not yet a partnership, it's a business, because after you bring on partners, that's when it becomes a partnership. All right. So the person says, okay, you know what? I have the money to give. I believe in what you're doing. Let me bring forth this amount of money, and then I get equity. So that's one of the reasons. So that's an advantage that somebody, would bring in money. Another advantage is that knowledge base. I believe I've given this example before, but just in case you haven't heard this example, some people are very good in a certain area. Let's say you have very good technical skills, but you have someone that is so good in marketing. This person is so good in marketing, and you struggle because you don't know how to market. And of course, if there's no marketing, you really can't make good revenue, right? You need to be out there and sell your product or sell your services, right? And maybe this person is very good. The person has a track record of, closing deals. And you said, you know what? I'll bring you on because of this expertise. Now, it could be, if this is just an example of marketing, it could be a technical expertise. Maybe you're the one that is so good in marketing, and this person is very good, has technical skills, right? You might say, okay, that's what you want to bring on. Or maybe it's someone that, is very good in accounting and can keep you people in line, keep everybody in line, making sure that instead of outsourcing, which is another option, you might say, you know what, I want to bring the person in-house. I'll give the person a percentage, and I will just know that I don't have to really pay fees, really, because the person is a partner, right? So this is some of the things that you have to look at, money, expertise, and then of course, as we said that, of course, when you bring in money, you're sharing. The person is just taking over some of your financial burden, right? You're sharing expenses. So it's really, that's mainly what people do to bring in the why, why people, not what I would say, why people bring in partners, that because a partner, because of these specifics, right? There could be other reasons, but these are really the main reasons, right? I mean, of course, it could be, there's so many reasons, but these are, again, they're specifics, really money and expertise, right? Or you could be doing it as a family, or you want to bring in your brother, your sister, maybe your parents say, you know what, bring one of us, you want somebody else to be part of your company. So it could be so many reasons, but a lot of times these are the major reasons. So you might sit down and say, you know what, for somebody might bring both funding and the expertise. So these are some of the reasons, all right? Now, which is great reasons, but what about the disadvantages of having a partner, right? What about the disadvantages? Remember, it was all about you, because you could say, you know what, I'm going to make this decision right now and go with it. Right now with a partner, of course, I will discuss types, maybe if you the kind of partner, but we'll discuss that. But generally, if you have a partner that really wants to be involved in the business, the decision making will be only you. You have to bring it to the table and say, you know what, this is what we should do. And of course, you guys agree on it or disagree, or make it better. Now, that might even not really be a disadvantage, because I mean, sometimes two good heads are better than one, or so it could be an advantage, but it could also be on the flip side, and it might be a disadvantage if you want to do some things for the business that is really good, and your partner says no. So of course, you can't just say, oh, I'm doing myself. No, it's a ship right now, right? So that's one of the disadvantages. Another disadvantage is disagreements, right? And of course, as I said, I'm going to discuss things to consider, what you should consider, right? When you're really even thinking of a partnership. Of course, this is in addition to the pros and cons, but disagreements, people disagree. They disagree. And sometimes this disagreement is not funny. It's not, it can bring, that disagreement can actually cause splitting of the partnership. And or somebody's taking another one to court, and this one is going to, oh yes, you didn't do this, you didn't do that, and that's a big thing. That's huge. So again, I'm going to talk about factors to consider when you're looking at bringing on a partner. All right. So again, you have to look at that. Disagreements, look at that might even lead to somebody taking another person to court. And then, I look at it, as a CPA working with various clients, I've seen this, who grew up with each other and they grew up together. They grew up together. I would say grew up together, not with each other, but they together. And at the end of the day, you'll be surprised what happens when they form a partnership, right? It's becomes something else. And then people are suing each other. They're taking people to court. So, it's not, another person feels betrayed, and it's really not a pretty picture. So those are some of these disadvantages, right? All right. And then also in a partnership, although we're going to talk about choice of entity, but in a partnership, when it comes to liability, there's exposure because you are not separate from the partnership, right? Usually when it's a limited liability company, or we're going to talk about that generally when I look at things to consider, because you have to understand the structure of the partnership, right? It's very important, because if it's just a partnership, if anything happens in that partnership, what happens is that they can come after anybody suing you. Now, I'm not talking about a partner suing another partner, but someone outside the partnership suing maybe suing you. What happens is that you, if you cannot fulfill maybe the judgments against the partnership, they will come after your personal assets, right? So that's something to consider, because when it comes to the partnership, you have to also look at the structure. All right. Now, these are some, of course, as I said, advantages and disadvantages are not exhaustive, but I just wanted to highlight some of them. So now, what are some of the factors to consider? Some of the factors to consider. Now, the very first factor to consider is to ask yourself, do you really need a partner? Okay, that's the first thing. You really need a partner, right? That's very important, because even if you grow up with people, right? So this is my, grow up somebody and friend or anything like that. You have to see the person's nature, because the person might be a very good friend, but might not be a very good business partner. Okay, you might say, oh, but why is that? Yeah, somebody can be very good at advising. You guys go out for fun and things like that. But when it comes to seriousness, the business, by seeing, that this person would not be a good fit for to be your partner. So you have to really know who you should invite. If you're saying that, yes, remember the first thing I asked is that, do you really need a partner? Now, if it's yes, if the answer is yes, factors to consider the nature of that person. Is that somebody that you can actually work with, right? Is it someone that follows the vision of your business? Is it somebody like that? All right. So very important, because if you don't have that thought process in place, what happens is that when that person comes in, from the beginning, there'll be issues. But if you have that thought process in place, there won't be any issues. I'm not saying that, let me not say that there won't be any issues. At least there can be issues, but most of it would have been avoided, because at least generally, that this person takes his or her work seriously. All right. But again, when, I mentioned that there are different kinds of partners, right? Generally, we have the general partner, we have the general partner and we have the limited partner, right? Now, It could be that the partner, because you're the general partner because you're running the business, right? So you're bringing somebody in. The person that is a general partner is also running the business with you, right? It's part of the daily running of the business, right? So that means that you both of you are liable for anything that happens. But if it's a limited partner, what happens is that the limited partner, they are liable up to the amount they invested, right? So that sometimes people will say, you know what, okay, I'll invest the money into the partnership, but I'm not really interested in running the business with you, all right? Because apparently the person sees that you're doing well, and the person says, you know, you want some money? That's fine. I'll put some money in your account, and you know, it's fine. I'll just need a percentage, but I'll be a limited partner. So if that's the case, if that's the case, right, the person might not really be involved in the daily running of the business, will not be involved, but there's some things that the person might want to see to make sure his or her investment is not just out there. All right. Now, when we're talking about the partnership, another thing that you should consider is an operating agreement. Now, usually operating agreements are not mandatory, but I always tell people, please make it mandatory, because, you know, one of the things that people take for granted is that, oh, he knows me, she knows me, I'm fine with that. No. Oh, yeah, they know what I think. I tell people that when there's an operating agreement, to me, I tell people that, yes, it might not be mandatory, but I would say that make sure that you have it mandatory for your company. Make it mandatory for your company. You know why? That sometimes that I might say something and I have a partner in the business, and the partner in the business did not really, maybe didn't hear what I said, or maybe misrepresented what I said by the way he or she heard what I said, but they heard it in a different way. Well, if there's an operating agreement, that won't happen. That issue would, oh, what do you mean? Oh, you didn't mean this? Everything is on paper, black and white, printed on paper. So at all times, you and your partner in the business, you see, oh, if there's any issue, oh, let's see what the operating agreement says. It's very important that there must be an operating agreement and signed by all parties, and each party should have a copy, right? It's very important. And then in the operating agreement, assuming that this person is, you know, I told you that sometimes you might bring on somebody because the person has very good technical skills. You might say, okay, that's fine. This technical skills, you are responsible for technical skills. I'm responsible for marketing and operations, right? And so because of that, there's no mix and match. But if it's a major decision, you bring it to the table, all right? Everything, all those things would be in the operating agreement. So it's so important for there to be an operating agreement, you know, assuming that you said, you know what, I've looked at it, I think it's very good for me to bring in a partner. It's not bad. Having a partner is not bad, of course, but if you can avoid it, no problem. That's not bad also. But if you cannot, it's also not bad. But you just have to put some caution and, you know, put things in place, precautions, and even be cautious so that making sure that everything that is written down that is adhered to when it comes to an operating agreement. Another thing you might look at in a partnership. Now, partnerships can easily elect to be a corporation. Of course, there are conditions that apply, right? And, you know, we have the S Corp and we have the C Corporation. So when you're looking at, you know, and also you can make a partnership and limited liability partnership too. So, but you have to look into the structure and see what works. You know, when we're looking at the S Corp structure, there are issues that might arise for the S Corp structure. The issue that might arise for the S Corp structure is that the ownership structure, right? I don't want to, I mean, I don't want to go and speak about the entire ownership structure issues with an S Corp. It's not really an issue. There are conditions that have to be fulfilled before you can become an S Corp. Okay. So very good entity. But again, you have to look at the big picture. That's why I say, I said at the beginning, and I say it as much as possible when I speak for educational purposes, because, it depends on your situation, the situation of your business, right? But it's good for you to hear that, oh, there's an S Corp available. There's an issue, a structure like that might work for me or for my business, for my partners. Now, remember, when we're talking about partners, we're not, people have 10 partners. All right. So it's not just one person. People can say, you know what, I want to bring in, one is in control of operations, so one in control of sales and marketing, the other one in control of the technical part of it, the technical part of it. So it just depends, right? So it's not like it has to be two people. All right. So these are some things that you should consider, right? And of course, as I said, what kind of partner are you looking for, right? It's not too much to repeat this, but know the person you're bringing into your business. Know from the beginning, if you see some red flags, I would say don't move forward with that particular person. It's better for you to wait a little bit and get somebody that you're really comfortable with, when the person is a partner, right? As opposed to someone that you just feel, you know what, will not work, but you're so much in a hurry. Because at the end of the day, when you get it so much in a hurry, you're hurrying up. You don't want the first month you start having problems. All right. And then somebody might say that, oh, but this operating agreement, but we are siblings, right? We are siblings. Why do we need operating agreements, right? Oh, we know each other, we're siblings. Well, the issue here is that siblings really grow up. Siblings get spouses, get married, and siblings have kids, right? And when the company may be starting now, there might not be a big issue, but as time goes on, and the family expands, then there are issues. You want to start bringing an operating agreement up that time, that might be an issue, because when there's money involved, honestly, usually, not honestly, I would say usually, then there's, oh, issues. Why are you putting this here? Why is this in the operating agreement? Are you trying to sideline us or something like that? But when it's at the beginning, no money, or just starting out, that's the best time to make sure that operating agreement is in place. All right. Okay. So, again, I usually tell people, I don't really feel that everybody's out to defraud. Oh, yeah, no, I don't feel that everybody in this world is out to defraud everybody. So I always say that there are mistakes. There are people that really did not really hear what you said when you made a statement on, oh, this is how we're going to do. They just didn't really hear it. It could be something they might, you saw, but the person was in your office and you guys spoke, or you went somewhere and you spoke about it, but people might be thinking of something else as you're speaking. So yeah, people might be, oh yeah, there's something that I'm thinking about, but they're right in front of you. And maybe that statement, they just, they didn't hear it. So it's so important that you actually do your best to, make sure, and not even do your best, I'll say make sure that every operating agreements are in place, at the beginning of the partnership. So as I said, it's not all bad. It's not all bad, right? Sometimes, as a business owner, your weakness, that there are some things you can't do, right? And then you just need someone to be out there for you, right? And especially in the marketing a product, right? You need someone to be out there for you. Some products, yes, you can market very easily on social media, but sometimes, right, you need to go above and beyond, right? Have somebody that is your person in front, and going ahead in front of you. But remember, you ask yourself, do you really need a partner? Because honestly, you might say, okay, you know what? I will have someone that does my marketing and I'll pay them, and pay them outsource market, an outsourced person, someone that you outsource and pay out. The person is not a salaried worker. Might actually work better for you if you're looking for someone that is out there for the marketing aspect of it, right? You can actually pay the person a commission. Say, okay, market, do this, I give you a base salary. Sometimes you might not even give the person a base salary. You say, as you sell, I will pay you on commit. It depends on how you want to structure it, because I know that when it comes to sales, there's a way they structure it. I'm not sure, I'm not a salesperson, but I know that I've had contracts that people come and say, oh yeah, I will do some sales and marketing for you. And there's so many ways that you can pay for that. All right. So again, the question is, do you really need a partner? Another option when it comes to outsourcing, I mean, like accounting, people have that as opposed to have someone in-house to do operations for them, right? So again, I'm not saying that maybe this doesn't work for you. Maybe you do not need outsourcing, right? Maybe you need someone on ground. Maybe you're someone like you are a technology company and you are the brain behind the technology, but you don't know how to produce the software, right? You are just, architecture, what the software should do. When you have like the brain behind your software, you have this software that you have the mind, what the software is supposed to do, but you don't know how to create the app or create the back end stuff. Then you might say, you know what, I need someone that is very grounded in that area to work my business on that, right? And and then have some kind of fee arrangement with that person, right? But there are so many ways, so many fee arrangements, and that's why I said, if you don't need a partner, talk to your CPA. Say, okay, this is what I'm looking at. I mean, is there any option? There's nothing wrong with, as I said, there's nothing wrong with bringing on a partner. But again, the most important thing is that knowing how to do it, knowing how to go about it. All right. We look and say, okay, these are the pros, these are the cons. And of course, I highlighted on things that you have to consider, right? Ask yourself. And then of course, don't forget business structure. Don't forget, right? You don't want the issue or the kind of you don't want the issue, an issue where somebody sues your business, right? Your partner come after you because you don't have a good business structure. Remember, you don't have limited liability. So what happens is that if there's any delivers cake, right? With the delivery van, of course, you guys have a delivery van and there's an accident. We hope that doesn't happen. But if it does happen and your business cannot pay for, what happened, all these issues with the accident, and at the end of the day, they can come after your assets. So you don't want that to happen. So make sure that even as a partnership, you understand the kind of business structure that you need to have. All right. It's very, very important. All right. So I hope I've been able to answer that question. I know the question keeps on coming up. Oh, do I need a partner? Do I need, before I conclude this section, when people say, oh yeah, I want to be part of your partnership because I want to contribute funds I want to be part of your business because I want to contribute funds to your business so that we can be a partnership. Please make sure they have the funds, right? Make sure that there's funds to be contributed. They are just not saying, oh, I'm expecting money coming through. That's not what you should be looking at. You should not, if somebody is saying that that's what I bring to the table, because it's different if someone wants to bring expertise to the table because you know that this person is good in what the person does. The person has a track record and that's easy to verify. But when it comes to money, someone says, you know what, I want to invest. Make sure you understand what the person has the money to invest in, okay? Because, if somebody says, oh, I have financial records, right? Financial records. Before you agree on those financial records, I know is a very, should I say stretch? It's very, very huge stretch because nobody say, oh, it's expensive. Yeah. If somebody wants to be part of your company and they base it on a financial statement, I would say, I would say this financial statement or maybe a business financial statement, I want it to be audited. For me, I would say audited, something to verify, verify that money that is actually there, something to show, right? You don't want someone to promise you and the person comes into the company and the person cannot pay. All right. So make sure you have, your accountant look at it, make sure that you have an attorney involved. Make sure that when the person says they're bringing that amount of money, the agreement states that the person is bringing, let's say, whatever amount, maybe depending on the valuation of your business, the person is bringing 50, 20, 30, 100,000. 200,000, whatever the person is bringing for that equity, right? So that contract between the person and you, that's operating agreement is different. It's how you operate the partnership. But that contract that the person is saying, I'm bringing that amount of money, that amount must be in the account before you relinquish equity. That contract must be signed. All right. So make sure you know that, because you don't want to relinquish equity and there's no contract signed because this person did not bring the money that was expected. Okay. So make sure everything that you want to happen when it comes to, the partner coming, the new partner, make sure, initial contracts are signed. Operating agreement is different from that initial contract. And that contract, the person has to adhere to it, to bring in that person into the partnership. Okay. As I always say, I'm not an attorney. It's good to talk to an attorney to make sure that those contracts and everything is signed, for you to give up part of your business. Because you might say, oh, but the business you're starting off is not really, but your business, the goal of your business is to thrive. The goal is not to, not to, the goal of your business is to make sure that your business thrives. All right? Awesome. Okay. I've been able to help somebody today, but let's go to our questions, right? And continue, and just to conclude. All right. Okay, let's see. I think, not sure that I have this. Okay, yeah. Okay. So some of the questions here. What are some tax savings as we are in the mid-2023? I mean, this is just a broad question. I don't know where to start, but there are so many tax savings. I don't know. I can't list them out. I believe I have one of my shows has this tax, the tax savings, but let's see if I can mention a couple, just a few of them, right? So just make sure that you're taking all your deductions, right? Make sure that you're able to track all your expenses. I always encourage everybody to use their credit, debit, checking accounts. There should be a paper trail. So tax savings, number one, make sure you're able to take all your deductions, so that you pay less taxes. Okay, that's one of them that I would say. Of course, another one is look into your retirement. Make sure you're maxing out your retirement. Make sure you're contributing to your retirement. All right, that's another issue, because it's very important, because I've seen people that just like cash to be in their account. And I mean, it's not bad to have cash in your account, but if you're paying tax on that cash, then there's a problem. So make sure the money is working for you. If you don't need that kind of money, make sure you're maximizing your retirement plan. When you maximize your retirement plan, there's actually taxes, but it also depends on the retirement plan, right? That you're into, and we'll look at that later on. I believe I actually spoke on that, but again, it's very important for you to talk to your financial advisor to say, okay, you know what, I want to have a retirement plan. And if you or if you have one, make sure you're putting enough money in there. All right. That's the second one. Another way to start tax savings is, I believe, I mentioned this, I believe, last week, and I will just add it here. This is the summer, and I mentioned that if you have a property, right, that you use, right, now, if your business uses it for, let's say, 14 days or less, right, that can be an expense to your business, but guess what? It's not taxable to you. It's not income to you as long as it's 14 days or less, right? That's huge. That's a huge tax savings. So that might be something as a business owner you would like to consider. So, I mean, there are lots, but I just wanted us to just highlight those ones. Let's see if I can give one more. Yes. Make sure that, I hope we all know that any party, like this is still summer or still in the summer, meals and entertainment, it depends on how you structure it. For the whole office, it can be 100% deductible, but again, it depends. Make sure you talk to your accountant to look at the details. But yes, if there's meals, this is the summer, people take their staff, and have a barbecue or have a picnic for them, and to that extent, of course, again, talk to your accountant, or can talk to us if you want to, and look at, the pointers, the entry, the conditions that apply to make sure that you are maximizing that expense. Remember, it's usually 50%, but there are some cases it's 100% deductible. All right. Okay. So let's go to next question. Again, there are lots. So I always say that talk to your accountant. Let them, some cases they will just be peculiar to what you do, peculiar to what you're doing. So, so it depends on your company. So it just depends on various factors. That's why I always say that this is for educational purposes only. It's not a substitute for professional advice. So, like, for example, some clients, their clients have their own specific requests that we go through everything to see, what really works for that client. Okay. So talk to your accountant. Okay. Okay. So the next question is, I'm planning to do a retirement plan for my company. Do I do Roth or traditional IRA? Now, those that don't know, Roth is different from a traditional IRA. That's why I can't say yes or no to this, but I will tell you the difference, right? So the Roth IRA would mean that you will pay the taxes now, right? As you contribute to the Roth IRA, you pay the taxes now. And then when you're retiring, you don't pay taxes on the amount you're getting. Now, the traditional IRA, you don't pay the taxes now, but when you're retiring, you pay the taxes then when the distribution. So I would say you ask yourself, when are you going to make the most money? Are you making more money now when you're working, or you're making more money? We're going to make more money when you're retired. People might say, oh, no, that's not, how is it possible? Yes, some people are waiting to retire and they're just waiting because they've actually they have so many investments left everywhere. So when they retire, they're going to actually make more money. So it just depends. And that's why I say on this platform, I don't give a blanket answer. So I say that it depends, right? Depends on what situation you're in, what bucket you fall in when it comes to this. Now, I would say that, people make this mistake and say, oh, my friend is going to Roth IRA. Oh, my friend is going with the traditional IRA. And I ask them, I say, you know what? Many times, not every will tell you exactly how much money they have, how much money they keep putting aside. They don't really, some people don't want to share that. So the best thing with your financial advisor, and let them know, talk to them on everything generally, on, speak to them on what is it that you need to do when it comes to the Roth, which one should you go when it comes to the Roth or traditional, based on your goals, based on, what, pertains to you and your family. Okay. So it's very important to be transparent to your business advisor. All right. Okay. The next question is, I understand that life insurance premiums are tax deductible. So is that true? Okay. Again, the answer is it depends, right? Now, if the business expense, it is tax deductible, but if it's not tax deductible. And you might say, what is a business expense? Now, for life insurance premium, right? I have to go through the, explain, if you're coming to me, I'll explain to you, but it's good, again, to really find out when you're talking to your accountant, you to explain to the accountant, is it for the employees, right? Is it the company is benefiting from the the insurance, right? So who is it for, right? Usually if it's for the employees, it's deductible. But of course, one has to look at the policy to see which one. So when you say that life insurance premiums are tax deductible, that's really not really always correct, right? There are some conditions that apply. So again, just wanted to let you know, educational purposes only is very important for us to hear and see. As an accountant, I'll personally ask you questions to know if it is tax deductible or not. Because if you're the owner, you're paying it, or the business then we have to look at it, because usually the owner premiums paid for the owner usually is not. But again, conditions apply. So I don't want to say, oh yes, no, but I just know that, I want to tell you that sometimes it is. The life insurance premiums sometimes are tax deductible. All right. Okay. So I think, we have a little time for the last question. I believe, there's one more. Okay, let's see if I can do one more. I've just replaced the roof of my office building. I want to expense, but my accountant says I need to capitalize this. Is my accountant correct? Oh, really? Okay. Cannot say if your accountant is correct, but I want to tell you that it just depends on how, when we look at roof replacement, there are so many questions that are tied, to roof replacement, very many, so many tied to roof replacement. So when we are saying that you want to expense the cost and your accountant says you need to capitalize, there must be a reason why your accountant you need to capitalize that expense. And that's cost. I know that the beauty of expensing is that you reduce your profit. I'm sure you're looking at paying less, paying taxes. Not paying so much in taxes, because of course, if you reduce your profit, usually taxes will go down, right? But if you have to capitalize, there must be a reason that your accountant is saying that, because usually if it's a betterment, if your roof is like you have to replace the whole roof and is making the place a betterment, is different from repairing, right? If you're saying replacing, I have to look at details, because you might think it's replacing. Accounting language is very different. You might say, I'm replacing my roof, but there's some criteria we need to go through and say, maybe to you is a replacement, but when we look at the criteria, it doesn't fall under replacement. It falls under, fixing it just to, repairs. So if it's no, the other way around, you might say that, it falls under repairs. Okay. You might say, it falls under repairs. But the counter might say, no, this is really a whole big change. So it just depends on the definition, not on by what we say, right? Or is it replacement? No, it depends on certain factors, right? It depends on, of course, if I'm the one handling this, I will interview you. I'll interview you. I may not say interview, ask questions to find out, really, is it really is it really repairs? Because your question is that you want it expensive, but your accountant is saying, no, this is not just a repair, it's fixing everything up. All right. So that's really what the accountant is looking at. But I can't say, you said, is my accountant correct? I'm not going to say yes or no, but I'm just trying to explain to you why your accountant will say, this has to be capitalized over the period of time, as opposed to expensing it. Okay, so I'm not gonna say your accountant is wrong. All right. Okay. So yes. So I hopefully I've answered your questions, and hopefully it's not, I'm sorry, hopefully it's not that, oh my goodness, you expected to get an answer from me that, it is wrong, the content is wrong. No, it doesn't work like that, because I don't know the whole scenario and the picture and I don't know how, what you put into it to say that, it's a repair as opposed to a capitalized cost. All right. So I hope I've been able to answer some questions today. Again, it's been a nice time being here. Of course, again, if your business needs to do well, if you want your business to do well, right? You have to ensure that you are intentional about it. Of course, as I said, I could speak and go on and on and on, but you have to make sure that you're intentional about your business. All right. So make sure that you're doing the needful, right? All right. Thanks again for being with me here today. I look forward to seeing you next time. And of course, if you want more information, go to my website, www.dr.iniadesanya.com is dr.iniadesanya.com. And then, of course, if you want to appear on this program just to share some of your issues so I can address it on this platform, please go ahead. And, just go to my website and then, find out how you can appear here. All right. Take care. See you next time. Bye for now.